Thanks everybody for joining. Today is January 22nd for the stock group. Turn some of this off on my screen. There we go. All right. So it's been a brutal week in the market. So this is the Dow Industrials. You can see this Monday, Tuesday, Wednesday. I guess Monday's here, right? Monday, Tuesday, Wednesday, Thursday, and Friday. It's been an accelerated move down on the Dow this week. The NASDAQ had an up day Monday, but fell out of bed since. The Russell, same. And then S&P. Now, turn the moving averages back on for the S&P here, and let me hide a couple of these. Just want to point out something here. All right, so an S&P 500, and we'll just use that as a barometer for the entire market, right? You can see here, this orange line is the 50-day moving average, and this gray line here is the 200-day moving average. What you can see here is, and let me expand out. Go back even further. So this 200-day moving average is a well-known benchmark that if you break the 200, that is a sign that a lot of institutional investors look at. And I don't know if you all remember, but we talked about back here in September that this 4,300 level was a key point. So we got two pieces of data here. So we can take this in terms of this support level, and then in addition to this 200-day, we came down and we broke below this 200-day there, and I have been noting this 4,300 because this is the last time we had a pullback in the S&P back in September, and we touched this 4,300 number here. And so my thought is next week is going to really be telling, because if this trend continues down, and we get to this 43, and this actually already may be the point where the bad stuff is taking place. Because what happens is that it could be a lot of program trading set up, meaning that there's algorithms based upon this 200-day moving average where institutional money may just start selling even more. We've already got, so if you look here, let me draw this point. So if you look here, you can see we already got increasing volume. So we got a good bit of volume on Friday, but and so let's note these big volume days here. Let me change my drawing tool. Hold on one second. Let's see, take those off and draw here. So look at these volume days. It's going back to September. What is that? That's December. That's December. And then you can see here in January, right? So these volume days here are showing where we were pulling back. Now, again, this 200-day and this 4,300 level, to me, these are really big numbers. So we've already eclipsed this one. So that's the first definite warning sign, combined with this week's huge pullback thus far. We break this 4,300, and it may be too late here, like I say, but if we break this 4,300, so then let's look at where the next support levels. Then you got the 42.26 and then 41.18. So let's measure this out as well in terms. Let's see how far down. So if you go from the peak, so if we say, so right now we're looking at a 10% pullback in the S&P. The next point will be no, I'm sorry, that was 9, about 9%. 10.7, 12, 13, and then here's about a 20. Now, technically, a 20% pullback now in what they technically call a correction. I hope we don't get all the way back to this 38.51. If we do, it's going to be extremely painful. So I would definitely say, whatever you're holding, be convicted about it, because if this thing continues down, there's going to be a lot more downside, right? So let me go back to the Russell for a second. Look at this Russell move down from the peak of November 5th. And if you own any small caps, they have been getting absolutely killed. So we're already in a true technical correction in the Russell, because we're down almost 20%. So, and it can possibly go lower. So be careful is what I would say. Now, by the same token, you value investors, and even short traders that trade to the short side, this market is definitely providing you some opportunity. So also I would say, so on the value side, again, we talked about a little bit last week, there's going to be more companies that have actual earnings. They're not going to suffer as bad. You can see Apple here. Apple is down, 20 points off the highs. That's nothing. Let's see. Banks, financials, they're not down that much. So Aegon, let's look at Bank of America. Bank of America, a little pullback, nothing serious. And again, since all three indexes were down this week, you're gonna have a pullback a little bit in everything. So, but overall, the banks are still doing well. Yeah, Boeing is really interesting. Boeing actually had been running until Wednesday. Wednesday, they fell out of bed with everything else. You can see Boeing's at a high 225 on Wednesday, pulled all the way back to 205. And if you look here, and this is an industrial stock, so when there's a rotation out of speculation and growth into value, more of your hard assets. So less of tech, more of physical type goods, and think of Boeing as being an industrial. But when the broader market, where everything starts to get crushed, it really doesn't matter. They're starting to sell everything. But they're going to fare better. So I've been adding to certain positions, and actually let me show you one that got killed yesterday. I mean, more so than most. So look at this chart here. This is Shopify. So Shopify is an e-commerce company, and got a lot of people that do business on the web. They use Shopify. So you can see here, Shopify is back down to this 874, and literally it was at 1700. What is that? In November, right? So, and even for the first of the year, it was at 1387, right? So Shopify's pulling back huge on this as well. Let's look at some other names. Let's look at McDonald's. So again, you want to start looking at these value plays, or even things in your watch list, and this is where you can look at your charts and see, okay, are there extreme support levels that some of these stocks are getting to that I want to be an owner in? And I would definitely say, and times like this, use this opportunity to buy better quality names than maybe some that you've had before, or things that you've been looking at before, and it's like, hey, if this name ever get down to a certain level that I've been wanting to buy, but it was higher priced before, you may want to just start looking at and shortening up your list to try to find some ideas. Now, that's not to say that we still can't go lower, because I talked about if that S&P breaks that 4,300, it could be a long way down to the 38s. So, but McDonald's is a name that has done well. You can see here that it going back to March, just been in a huge uptrend. Now we got a pull back here. So McDonald's. Let's see. Let's look at Caterpillar. Caterpillar is doing okay. Got to pull back. Everything's going to be down for the this week, but Caterpillar has been doing pretty well off of these December 1st and December 20th lows. These are this December 20th piece here is financials, as well as looks like some of these industrial stocks that was put in a low at December, and they started to rally there. And so to me, it just shows that there was more rotation into the value plays. So let me stop there for any questions. And good morning to everybody that joined in. Any questions? Any questions?
Mike, look at JP Morgan. Seems like it's doing worse than the other banks for some reason.
Yeah. Now this week has been brutal. So everybody getting killed this week. But they were holding their own. So this is Friday. Yeah. Last week the 13th. Yes.
Oh yeah.
They were doing good, but this week has just been absolutely brutal. Absolutely brutal. So they and even to that point, so let's just chart this up real quick. So we say here, it's high here. So just looking at some peaks and valleys right in this area. All right. Peak right here, peak here. Valley. Definitely. So look at this here. So in JP Morgan, you got this strong support at this 144. Say next support here, next support there, next support here, right? And so if we take even a longer view, let's see how far back we're gonna go here. So JP Morgan has been doing well, but you can see as this thing start to break down, you want to just note your support areas: 135, 124, 114. And so if you just measure this out, if we continue to get a pullback in the S&P, so you say so far we're down 14% from the highs. Next support point is 20%, and then third support point is 26, almost 27%. So just want to maybe note some of these areas, and if you're going to be adding to your position or starting position, you can maybe just use these as areas to start adding to your bag. Now, again, buyer beware. They're selling everything. So, be careful, because you can lose a lot of money on paper here. Now, and I would say for your traders, for people that are trading, have more of a short term, you gotta sell quickly in markets like this, or stay on the sidelines, because things can happen fast. For long-term people, if you truly have a long-term perspective, you want to use these opportunities to buy better quality names, and you're just going to have to endure some of this pain. But and so the thing is, so let me go back. I want to show this, and this is just part of the overall narrative. Let me get back to the S&P. And I'm gonna show like a monthly chart. So let's go to a monthly on the S&P. So I want to go back. All right. So here's a pandemic low, but even really, this goes back to 2009, right? So when you look at this trend line here on the S&P, and then the second trend line here, we really have been in a bull market since 2009. So you can see we got a few pullbacks. One here in 16, another one here in December 18. This is Corona pullback, and then since the coronavirus pandemic, we've just been rocket ship up, and we got a little pullback back in here in October, and then this one now. So when you put that in context, just in a larger piece, you go back to 2009, up until the pandemic is when we first had our major pullback. And so if you measure this pullback from the pandemic, let's see what percentage that is. So from high to low, talking 35%, right? So if you take that and you say, hey, if we get a pullback somewhere of that same magnitude, 35%, talking S&P down to 3158, and we're at 43.97. We're at now, 43.97 now. So don't know what's going to happen. It's a lot of, so one of the things is, a bunch of speculation around, well, when we say speculation, the data is showing that inflation is higher than it's been last 30 years, right? So that's one thing. As a result, the Feds are talking about raising rates. So, and basically that means that they're going to be raising rates as opposed to flooding money into the market. So as a result of that, that spooked the market out. That makes bonds a bit more attractive, and a rotation out of equities. And so, sometimes they refer to it as risk on, risk off. So we're definitely in a risk off environment, and they're just taking profits and selling things. So, that's just the larger narrative. But considering that we've been in this bull run with a pullback in 2020 for the 2002, I meant 2020 for the pandemic, and then off to the races since then. So I don't know how much lower this can go, and again, all you got to do is just got to use your support points as it relates to the S&P. And again, just focusing on the S&P because you can use it as a barometer for all the markets, be it Dow, the NASDAQ, Russell, but S&P is widely watched. And that, again, that 50-day, we've broken the 200-day, I'm sorry, and this 4,300 number because we're back to what happened in October. So, any other questions? So let me ask you all, what are you all looking to buy? What are you all looking to buy in this market, if anything? Or are you just sitting on the sidelines? What looks attractive to you? To me, because some stuff just absolutely killed. Look at this, Robinhood down to 12. Let's see some other names. Here's now this actually has held on a little bit better, but still pulled back pretty decently. This is lithium ETF, lithium and battery technology ETF. They're now to 78 from the high of 97. Let's look, now here's a bright spot. Let's look at Lowe's and Home Depot. Other than really this, last couple of weeks, Lowe's has been on an absolute tear. From the pandemic lows of 63 up to 262. Home Depot, I think, is even a little bit better. Yeah, from 138 to 419. Now we pull back. So actually, Home Depot's pulled back a little bit more than Lowe's has. Let's look at Costco. Again, anything this week, it's going to get killed. But Costco is pulling back off its highs. So you can even see some of these names that have done very, very well. They're even pulling back in the last few weeks. See another name. Let's look at Microsoft. Microsoft has been on a tear. They've pulled back in the last 3 weeks. Actually, Microsoft came out this week saying that they're going to buy Activision Blizzard, which is a gaming franchise. And so I think $68 billion acquisition. It's a crazy number. Yep. But Microsoft has even pulled back. Let's see some other talk about Boeing. Let's look at Deere. John Deere. So John Deere's actually only had a little pullback, last 2 weeks, but they've been going up and holding sideways pretty well. Let's look at FCX. This is a copper company. So you can definitely see here from September, October that they started buying this copper name and going up. So let's look at Five Below, this discount retailer. I remember some time ago when you get into these situations where you start to get a pullback, start thinking about like what companies do well if the economy is starting to turn around for to the negative. So discount retailers, Five Below is one. You can think of Dollar Tree. What's the ticker? Dollar Tree. DLTR. So you can see here, off of these September lows, Dollar Tree has done well, just a pullback in the last couple of weeks. But overall, nothing compared to what some of these tech names and small caps have done. So let's look at our list. But before I go to that, any other questions? Any particular names we're gonna want to look at specifically?
Look at PayPal, Mike.
Okay. Now I can tell you, Kurt, without even pulling a chart up, PayPal was getting killed early because a bunch of the payment names were really suffering earlier. So let me go to a daily, and you can see here. So again, this is going back to October. So PayPal has really been in this downturn, tried to rebound back in December, kind of went sideways, and really pretty much from the beginning of the year, it's just continued this downward trend here. So PayPal's been getting killed. Look at here's another one, Square. Square has just been taken out to the woodshed. They act like they're never gonna send any more money or do any more business. You can see this is straight down from the highs of October. Yep. So they're just killing Square as well. And at one point, Square, PayPal, Visa, and MasterCard, they were all kind of trending together. But Visa and MasterCard, they broke out from this downtrend and they started to reverse here in December. So Visa and MasterCard has actually got a bounce where they were in line with this overall trend that was affecting all the payment stuff. But they kind of broke out of that again. So back in December, and they rallied up. Now you got to pull back this last week because everything has pulled back. But MasterCard has done well. You compare that to Visa, same bounce here at that November area back up, but got to pull back this week. So that's to be expected. So PayPal, Visa, MasterCard, let's see one of the other payment names. Not Venmo. It's another one. I just can't call it down. Let's look at what's the faces company. Global. Yeah. It's a payment transaction company. that Vanessa works for. So they kind of follow the same path here at Visa and MasterCard, and they've done well off that bottom. Whereas PayPal and Square, they just continue to sell them. They did not get a bounce in December. So any other names? And everybody got a hard stop at 11. So we got another 30 minutes. So just FYI.
Fanbase. I've never heard of Fanbase.
Sounds like Angela. What was that?
Fanbase.
Fanbase.
How y'all doing?
What's up, Jew? Fanbase. I'm not familiar with Fanbase, Jew. What's the name of the? Do you know the ticker?
No, it's a new social media.
It's a new social media platform.
They're not publicly traded as of yet,
Yeah.
unless they're owned by a larger company. Let's see.
No, they're just not coming out.
They're just not coming out.
Oh, okay. Yeah, no, they're not traded yet. Mm-hmm.
Right? Or you can buy stock, right? You can buy stock.
You can buy stock.
Say it again.
She said you can buy stock right now.
If you got it, tell her if she can find a ticker, I'll pull it up. Yeah, but I don't see it listed. Yeah, it's not coming up. It's not coming up in the chart symbol. Let's look at. So, see here, you got Facebook. Facebook is pulled back. I think Netflix got killed yesterday too. Yeah, they came out with earnings. So look at here. This pretty interesting chart. So you see this here. See this last trade on, what was that? January 20th into the 22nd. See this huge gap. That's when you get bad news and you don't even have a candle in between these two areas, right? So you got this candle here, then you got this candle here. So overnight, earnings must have came out either before or after hours, and Netflix got killed. So they lost. This is a 1 day move from. Yeah, so Netflix down 27% in 1 day. It's huge. So there's Netflix, Facebook. Apple has done well. If you have held Apple hit the highs of 182. It's pulled back because of everything's been pulling back, but 162. But they've actually held their own. So that's good. I can go through some of these small cap names and they're going to be brutal. I can pull up a few, or if there's some that you all want for me to go over, I can do that as well. So let's look at Coinbase. It's not a small cap, but so for those that are in crypto, Coinbase is a crypto exchange. Coinbase is pulled back. It actually came public. At 300? Now it's 191. So Coinbase is getting killed along with everything else. And crypto in general has followed this downtrend in the overall market. So the stock market has been leading the crypto market lower, just as a whole. So if you hold in crypto, you're probably suffering over there as well. Let's look at IBM. IBM did well off of this 114 lows, got up to as high as 142. It's pulled back to 129. This 118, this 114 in IBM was definitely support. You see it ran off of there. At this 129, if the broader market continues to sell off, I expect IBM to come down. It's going to get interesting at this 122. If it gets back to this 128, might be a area you want to start just nibbling. Let's see. Any other names you want me to look at specifically?
What about the airlines and cruise lines?
All right, good question, Kurt. Let's see how they're doing. So Delta. December 20th was an area that most of the airlines took a bounce to the positive side and up. But you see this past week, everything is falling out of bed. But they pretty much all had this December 20th up and then now pulled back these last few days. So that's Spirit. Let's look at Love, Southwest Airline, December 20th, up to a high. Move this out of the way. Excuse me. Up to a high like January 14th, and then just a pullback this week. But Airlines definitely has done well to hold their own. Let's see here. Yep. Let's see. American. Actually, American is doing a bit worse because they got that bump up, but really this week they sold back all of the gains that is achieved since December. So don't know what's going on with American, but their chart they gave. So let's just measure that out off of these December 20th lows. They made 20% and they gave it all back literally in 6 days. So that's brutal. Let's look at cruise lines. Carnival, pretty much tracking the same. Pull back this week. Norwegian, I can never remember their ticker. Norwegian cruise lines. Is it HCL? There we go. HCLH. Pretty much the same here. So pretty much travel and leisure airline stocks, they're pretty much all tracking the same. All was doing well up until this week, other than and they have not gave back all of those gains that they reached up until January 13th, 14th, except Delta Airlines. Delta Airlines got killed. Hey, come on. So come on, let's look at your checkpoint software. Was it? That's not the right. There we go. Checkpoint software. Actually, now here's a stock that, if you look at this week, you see where everything else was down. Checkpoint is actually bucking the market. It only had 2 down days this week, where everything else was down all week, pretty much. So Checkpoint is showing, strength against this market pullback. And you actually see here, they're actually up in these highs coming off of these January 6th lows, as well as this December 3rd lows. So Checkpoint is doing really well. It's actually bucking the trend. You're not going to find many stocks that are doing this. Let's see. Again, what names are you all looking to add to your portfolio for long term, given that a lot of these stocks are now discounted?
I'm looking into the travel and leisure stuff. So you already hit mine.
Okay. All right. Thanks, Kurt. Anybody else? Let's look at Wingstop. I know Deacon and David were Wingstop owners. Now, actually, this Wingstop looks pretty interesting because you're here at this, broke this first level support, 157, down here at this 142. Now, what's interesting on this Wingstop is that we've seen in the market, yesterday was a huge down day for the NASDAQ, S&P, and the Dow, whereas Wingstop actually they reversed these lows and actually closed up higher than they opened. So this is a good sign for Wingstop, and it did it a bit on a little bit of volume as well. So you got buyers here at this 142, 139 area of Wingstop, and it's at a support level. So it's I guess the thighs is like they, hey, people still gonna eat. So Wingstop holding its own. Let me see some other names. Oh, I remember last week I asked everybody to go in and look at their portfolio as of January 1st to see what that number was and to write it down somewhere so you can take a yearly performance number so you can see what your overall yearly numbers are. So hopefully everybody did that. If you compare that number to where we are today in terms of where your portfolio is, it's probably down just because we've had this pullback in the markets, unless you've had some exceptional names that have bucked the trend. Let's see. So here's some of these small caps. Palantir's just been absolutely killed. Fubo, they're killing this thing. Showed Robinhood. Let's see another name. It's got Lemonade. This is online insurance stock. It's actually IPO. They're killing this thing. It's at a high of, you can see how brutal this has been. Hit a high of 187. It's a $29 stock now. Killing it. Mara, this is a Bitcoin related company. I think a Bitcoin miner. Hit a high 84. Now it's 22. Let's see. Show Netflix. Let's look at Nvidia. Now, actually, Nvidia, they've pulled back, pretty good from this 346 down to 220s, but it's coming up to a support level of these 200. And then the next, say, major support level here is 210. So they've held up pretty well. But if you bought up at these levels, you're hurting a bit. So anything tech related is just they're selling tech off hard. So we got Qualcomm, chip maker. They've done well, but you can see this last week, definitely a pullback. You want to note this area here, because if they close below this gap right here at this 152, it could be trouble below. But you got about 12 points there before you can see it get down there. Like I showed you the Shopify. I bought some of this. I bought a little bit early yesterday, and then they just killed it even worse. So if I show you this intraday chart, so the stock was doing all right. So 930 at the $1,000 level, right? And then at 11, so from 11 to like 245, this thing dropped from 900, say 950 to 872 real quick, matter of a couple hours. But you can see you got some good volume here. So, and when you look at this, so you got a quadruple bottom here on this Shopify at this 877 mark. I don't know why they sold this name off so hard. I believe there must have been a downgrade or something else, but either that or there's just, well, you don't really have to know the news. All you know is that whoever owned it, they sold a bunch of shares and they wanted to get out of it. And so that's and you can see the volume here. So you compare that to, so let me show here. So if you look at some of the higher volume points, you have to go all the way back to June 2020, August, and then here's the next highest volume, was yesterday. So you got to go back literally, 2 years almost 2 years to get the same volume level. So yeah, they're selling Shopify like it's going out of style. Now here's a name that has held up well. AT&T. AT&T is actually off of these lows of December 16th. AT&T has really held well, and even this week they only had 3 down days this week versus, and you're talking about there was a minimal move off of the highs. But you're down like 4% for the week. So AT&T is a safety name at this point. And another option is just sit on the sidelines. When you see all this carnage happening in the market like this, if you don't have the risk appetite to try to add to your position or even establish a position, just being in cash and sitting on the sidelines, that's a strategy as well, and it will save you some money. Now I don't know how many people on here. I don't go short. I don't typically short stocks, but if you would have shorted some of these names, you would have made a lot of money here recently. But I don't play to the short side, so I'm not sure if others do or not. Got about 15 minutes left, guys. So floor is open. Any question, comment, or anything else we want to cover?
Can you click on Tesla?
Yes, sir. Yeah. Now, Tesla is interesting. Tesla hit a high here. So it hit a high several times. So you can see Tesla was in this box. So actually, if I extend this box to the right, Tesla was still doing well. And even with this week's pullback, it was just Friday that it broke out the bottom of that box area at this 1,097. So you can see the last time Tesla got down to this area of 886, 900 area, it rallied from there up until 1,200, and then this rally from 887 up into 1,200 again. So you're getting awfully close. So I would say this area here, if it touch this box, that box has been a bouncing point for Tesla. So anything between 908 and 886. Now, I spoke about it a little bit earlier. I don't know what's going to happen with this interest rate stuff, and how much more of this selling in the overall market is going to take place. So just got to be mindful of that. But Tesla's doing well, but definitely a pullback. But you got reference points on the chart to see what happens there. Let's say Tesla breaks below this 884. Where's your next buy area? Well, I won't say buy area, but next support area. You down here to the 773. So just want to keep an eye on this. This box here from 911 to 886, and then back down to 772. All right. Andre, you got any comments? Just go through the list here.
Mike, one question.
Yes, sir. Go ahead.
Yes.
Come on.
We just we are hearing that market is correcting now, correct?
Yes.
How long do you see that market correction? Is that what is actually I'm just trying to understand when it will settle.
Technically a correction, a market correction is 20 points off of the high, 20% off the highs. So let's just say we look at the S&P 500, right? So if you say from the highs, so if I measure here from the high of, what is this, January 4th, if we measure down 20%, shorten this up a little bit. So if we measure down 20%, let's see. So a correction, you don't really get in correction territory in an S&P until you get 20% down, right? That's what is truly what's defined as technically a correction. So you're talking 30% 38.51. So from there, we're at 43. So you're talking about from where we are today down, that's another 12% down. Whereas we've already been down 9%. So you're talking about we're halfway there. And so if you just double the amount of selling pressure that we have, we're just halfway through the cycle, in terms of the technical definition of a correction. Now, the other thing is this. This is what a lot of institutional people watch. They watch these moving averages. Here's a 50-day moving average, and then this gray line is the 200-day moving average. So on Friday, we broke through the 200-day moving average. Mm-hmm. And then when you look back at this support level here of this 4,300, that's an area where we had a most recent pullback into October. So to me, we've already broken this. So I would not be surprised to see more selling this coming week in the markets, just because we broke below the 200 on the S&P. The Russell is already below the 200. It's been below the 200s back since January. Let's see the Dow, and we broke the 200 on the Dow this week as well. So all three market averages, or four, should I say, have all broken below the 200 on their charts, right? And typically that's a major point that the institutional money, they look at this 200-day moving average. And that's a bearish sign when you break below the 200.
Yeah.
So again, so you just start to look at some of your levels below that to just try to figure out, how far you can go. So.
Okay. Another question is that now you see ETFs, especially ARK and ARKW, ARKZ.
Yeah.
I see it's keep going down actually.
Yeah. So you got to look at the focus here. So what's happened is we're in a rotation from, so you really got two schools. You have value and then you have growth stocks. Value stocks are stocks that, they grow slower. They don't have high valuations. The PEs are lower. But these growth stocks, a lot of times they don't have as much profit, but they're just focused strictly on growth, acceleration. But they're higher PE stocks, and so you don't get as much value. And so when you're in a growth mode, those stocks do really well. But when it switches from growth to value, those stocks get killed. And then particularly, so these are all the ARK, variants of the ETFs. All of her stuff is innovation and growth. So when they switch, so basically you can go here. So if you go back to the, so let's look at the Russell, right? Because a lot of her stocks are small cap stocks. When you see that we hit a high back in November, it's pretty much been a downturn from that high in November to where we are today. So if I go back and look at these ARK, so we're just going to look at if they correspond to that November. So you can see the high here, November. High in the ARKG, they was in the high of September. ARKK, high in November. ARKQ, high in November. ARKW, high in November. ARKX, high in November. And so they've closely followed what the Russell has done. And the Russell is down 20% off its highs. And you can see these stocks are down 22%. This ETF is off 22% from the highs. So in line. Yeah.
Okay. Is it right time to invest some more? Thing is that whatever the earlier investment made, now currently it is we did it in when we started in the usual on October and November time frame. There we put some money, started putting the money. Is it right time to put the money now so that at least average that money?
Yeah. Again, like I think I told you back then, if you dollar cost average, this is gonna pass at some point. The only wild card is what does the Fed do about these interest rates? If they become much more aggressive in their interest rates stance, then these things can go much lower. If they just raise one or two, or personally, I just want them to go ahead and do the first raise and get it out of the way, because then it takes the speculation out. It's like, okay, they went ahead, they raised, we can factor that in. Whereas now, people just doesn't know where the bottom is, and so they're really the big boogeyman around that everybody's paying attention to. So I just want them to go ahead, get it over with. If you shoot me, go ahead and shoot me, squeeze the trigger, get it done. And then I can figure out what the damage is gonna be. And I think the market as a whole is just looking for some clarity, because right now there's just a bunch of uncertainty, and they're just selling off these names. So if you're taking the dollar cost average approach, just do that. Just add to your names, just add a little bit. And if you're just doing that, over every month, you're going to be fine if you're taking the long-term approach. It's just that, particularly, some people haven't experienced a bear market if they got into this game in the last couple years, particularly off the pandemic lows. But, so we're definitely in a correction, and this, and corrections, they suck, they're brutal, and they're swift. So, so you're really talking 2 months that we've had a 20% correction. And, we can you're giving it back a lot of gains. And one thing you can do, if this is too taxing or too nervous for anybody, you can always go to the sidelines and just wait until, you get confirmation that the correction is over. And one way to do that. So I'm gonna do this, and it's probably gonna be my last comment because we got about 3 minutes left. Again, I got that hard stop. So if you look at this here, you can just take so if I go to S&P, and I'm just use it as a barometer for everything. And I'm gonna use taking this point here in that red bar, and this point here in that red bar, and just extending the line. What you want to see happen, turn off the moving averages, clear it up. What you want to see happen is a confirmation that this this chart breaks to the upside of this downtrend. Until you get something to the right of this downtrend, just let the trend just continue to go down. You don't have to force it. Just wait. So like right here, we got this. Let me change this color to make it more apparent. So right here, we had this downtrend here. You didn't get confirmation until you got to the right of that green line. And what I'm saying here, let's just, if you're nervous and you don't like this and all of that, you can just wait till you get confirmation until you get close above the right of this green line. And we'll continue to talk about it during the week, each weekend, and just kind of showing you when we break this downtrend. So you can use that as a confirmation. But if you're dollar cost averaging, you already got it set up. Just let it keep running. But you got to have a long-term perspective, because things can get cheaper. And that's one of the things with dollar cost averaging. As long as you're just buying the same amount every month, as things get cheaper, you buy more of it. So if you're putting $50 in and say you're buying ARK, right? Whereas a month ago, you could only, you would have got a fraction of one because, it was more than $50. Whereas now you can get almost, 1.5 of them because they're $30, right? And if you just dollar cost average in, you're going to get the better price over time. So that's why you don't have to make all your buy decisions at the same time. You just let the market just do what it does. And if you're still a believer in some of those things, so like, for instance, you go to VOO, this is S&P 500, and it tracks S&P 500. If you just dollar cost average in, you're gonna get the best prices. So I would just say,
Mike,
yeah, go ahead.
I just want to throw in last week when I was talking about basically the same thing. This is what I meant, and not Kathy Woodstock. I have nothing against her, but I'm talking about something like this that has a long history of pullbacks and then going much higher. So when I was talking about, I like to see this because all this means is in the future, I'm going to make more money. So I love putting my money in when the S&P, all these things to track the S&P start going down like this. To me, this is just an opportunity to make money in the future.
Yeah, and I'll agree with that. And you got to have patience, though. Got to have patience. But start adding to these names. You got things on your watch list. And so we'll pick it up again next week. I got this hard stop for another meeting. So I appreciate it as always, and stay safe out there.